ASML is scheduled to report quarterly financial results on October 16th, which has a lot of investors asking if they should buy ASML stock before it announces earnings. Now, ASML is a key supplier to the semiconductor manufacturing industry, which is thriving as a result of rising effectiveness of AI. ASML has one of the strongest competitive advantages of any company that's out there because of the unique supply chain it has cultivated. So in this video, I'll preview what investors can expect from ASML in its upcoming earnings release and answer if they should buy the stock before earnings, after earnings, or if they should buy the stock at all.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with a preview from ASML in their key messages for investors on July 17th, they said that global megatrends in the electronics industry are supported by a highly profitable and fiercely innovative ecosystem that they have cultivated. That's expected to continue to fuel growth across the semiconductor market. The growth in the semiconductor market and increasing lithography intensity are driving demand for ASML's products and services. Longer term, the company feels it has an opportunity to reach annual revenue in 2025 between 30 and 40 billion with a gross profit margin of 55%. By 2030, the company believes it can achieve revenue between 44 and 60 billion with a gross profit margin of 58%. Those are significant growth estimates for ASML, which in 2024 is hardly going to experience any growth. That being said, management has said 2025 is expected to be a very strong year. ASML and its supply chain partners are actively adding and improving capacity to meet current and future customer demand, and its customers are relatively few. Each of its machines costs hundreds of millions of dollars, and only a few companies can afford them. These companies include Samsung, Taiwan Semiconductor Manufacturing, Micron, and others in the semiconductor industry, including Intel. So ASML has a pretty good idea of what its revenue is going to look like over the next couple of years because it's in close contact with its customers. ASML can do that because it doesn't have too many customers. ASML has one of the strongest competitive advantages as nobody can produce the highest end machines that ASML can produce with the lowest nanometer technology, which allows you to have more transistors on each semiconductor chip. For the third quarter, ASML is forecasting revenue between 6.7 and 7.3 billion. And for 2024 overall, I mentioned that they're not expecting very much growth. They expect similar total net sales in 2024 as they did in 2023. The company has yet to start experiencing the increasing revenue as a result of the rebounding semiconductor market. ASML has been one of the later companies to participate in this trend. Remember, companies buy ASML's machines when they want to increase capacity or when they want to upgrade to the latest generation technology. So the companies that ASML sells to, they've been utilizing their existing machines instead of ordering or receiving new machines at a higher rate in 2024. But that's expected to change in 2025 as ASML saying that they expect significant growth this in 2025 and in the future. They've been investing to capitalize on this opportunity, and they expect their buyers will place significant orders and they'll deliver significantly more orders in 2025. You can see a trend line here of ASML's net bookings, that is orders that its customers place. Now, ASML cannot count this as revenue until it delivers on this order, but it can report the orders and give investors an idea of what orders look like for the next several, or what orders have been like for the next few quarters. In the second quarter of 2023, they had $4.5 billion of orders. And then in the third quarter, that fell to $2.6 billion in orders before jumping to $9.1 billion in Q4 23. and then 3.6 billion in Q1 24 and 5.5 billion in Q2 2024. I wouldn't be surprised if there is a surge in orders over the next 4 quarters. Notably, Taiwan Semiconductor hasn't ordered as much from ASML as I was expecting. There has been some discussion about that. Taiwan Semiconductor has announced very large capital expenditure budgets, which for some of that budget, it's going to ASML machines, but I haven't yet seen that boost in orders from Taiwan Semiconductor to ASML. Now, I don't get information directly from ASML on that number, but the discussions from both companies have alluded to the fact that there is a delay in those orders, but those orders will be coming through. Of course, Taiwan Semiconductor is the primary supplier to companies like Apple, Nvidia, and AMD, and its business is thriving and it needs increasing capacity because it's getting increasing orders and it wants to stay ahead of the competition here to generate those newest research and development capabilities. Now, ASML is also benefiting, the company said, as a result of all of this increase in spending on fab facilities. The US government has incentivized semiconductor companies to build in the United States, and those budgets for building those new semiconductor manufacturing facilities will help ASML because they're all going to, or they're all very likely to include ASML's machinery. Micron has said it's adding several fabrication facilities. Intel is adding several. Samsung is adding a few. Taiwan Semiconductor is also building a couple. And so those several multi-billion-dollar investments are going to help fuel growth for ASML over the next 5 to 7 years. These are facilities that take some time to get onboarded. Now, ASML stock is trading at a forward price to earnings of 26, which is about on the lower end of where this stock has traded for going back all the way to January of 2022. I would say this is roughly fair value for the stock, a little bit below fair value. I've had ASML stock rated as a buy all year long, and so far year to date in 2024, ASML stock is up roughly 10% at $831 per share, started the year at around $750 per share. And so if you're curious if you should buy the stock before or after earnings, I think it's a matter of a question from your point on where is the biggest magnitude impact. Is there more of a downside or is there more of an upside to this earnings release? Is the stock at risk of falling following the earnings release, or is the stock at risk of jumping and you're missing out following the earnings release? I would say for ASML, it's equal-sided. I don't see one way or another a risk for ASML, either on the downside or the upside. I would say both sides of this equation are equally weighted. So as is often the case, I tell investors when it's this close to the earnings release and you're curious about to buy before or after, take your investment, split it up in half, and do half before earnings and half after earnings. That way, you alleviate the risks from missing out and you alleviate the downside risk by allocating half of your purchase after earnings. In some cases, I do say that the valuation is so cheap that there's more risk to the upside, and I suggest to buy before earnings. Or the other side where I say there's so much downside that you should just wait until after. But in most cases, it's an equal weighted risk, as is the case here with ASML stock. Now, to clarify, I do have ASML stock rated as a buy, but whether or not you should buy before or after earnings, I'm indifferent on that. So I suggest I would split my purchase in half and do half before and half after. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.